Yo, what is going on, everybody? Oh, look at you guys, ready to roll. Here, let me see if I can get this chat up. I never remember to watch it. Welcome, welcome. If you're new, just really quick, what we do every Monday, just kind of go through some of the major highlights from last week, what we're looking for this week. And this time I wanted to go over a little bit about Powell's FOMC speech. And I've been talking about like, okay, I'm going to buy by the end of the month. When is that happening? I really tried to be a bull yesterday. And it just not yesterday, Friday. It just didn't work out. Today is looking a little bit better, but honestly, I'm not quite ready. And I'm just gonna kind of go through what I'm looking at and why. But let's just do this here. I'm gonna take this down. If you guys don't have chats, but what is up? All right, see if that went through. Anyways, so yeah, I think what's funny about last week is that we had the FOMC speech, and I watched this thing called the Fed Watch tool, and all like leading up to his actual speech, I just kept looking at this. What is the market pricing in? And it was just freaking off, and I mean off. Like eh, as data kept coming out, the market kept pricing out the probability of another rate hike. And lo and behold, like what did he say? He said there's a very good chance of another rate hike coming in by the end of the year. And still, right now, still there's the market is still pricing out. So the market's not believing what he says. And that's what we're gonna kind of go through. But a couple of the major headlines, really quick. So national debt hit $33 trillion. I mean, like trillion with a T in total debt. That's going to weigh on a lot of the business investments. But at the same time, GDP growth is going up. At least the forecast is it's like 2.1% this year. And the Fed is still kind of like sitting on this 2% target. If you didn't catch it, the 2% target, which is inflation, that's actually backed out to like 2026. So we have a ways to go till we actually hit that. Sorry if the market's moving right now. I actually have no idea. I'm not even watching it. So hopefully I'm not messing with anybody's trades. I think we're a little choppy right now. Some funky stuff going out there. So while you're waiting for Monday IV to burn off, this is a good place to hang out. Retail sales came out, and I did want to point this out. So retail sales came out last week, and they were higher. So when we look at retail sales, that's kind of like what's the demand in the economy, and so supply, demand, that kind of stuff. Retail sales numbers came out, and it was high. But the reason why it was high, and if you're looking at these kind of numbers and you're not looking into why things are or what components are inside of these things, it was high because of gas prices. Other than that, it was actually flat. So we know oil's going up. We know that gas is up. Retail sales overall, now this starts to make sense. So this is probably the most like bullish or maybe more accurate reading that I did come across last week. So just again, once you take out gas prices from the retail sales numbers, and then you see that okay, well this is just about flat. That's it's not bad. It's not like bullish, but it's not super bearish either. When Powell took the stand, right? Or like when he went up to do a speech, I don't know what the market was expecting. I mean, were they expecting him to say, "Oh, we're gonna drop rates because credit's super tight and we have $33 trillion"? And no, he can't really say that. What ended up happening? It was what I would call like a hawkish hold. So he needed to put back on the table the probability of one more rate hike. He did it, and he said very specifically, possibly this year, which the market didn't believe, doesn't believe, wasn't expecting for him to say, but that's why we got that kind of shock to the downside. And if you look back at the charts, which we will do because we're going to get some pretty key levels today, when you look for that back of the charts, I mean, they just weren't expecting that. And so the second that came out of his mouth, it was like, holy crap. We actually moved an entire week's range on the S&P, SPY, in the course of like a few hours, believe it or not. And that's what happens when we have those type of like events. And again, if you follow me or you look at any of my stuff, I'm a big proponent that fundamental events, those create our technical levels. So we're going to pull a very specific technical level from Friday's fundamental event, which it was. And then we're going to have a couple more to trade off of. We're going to get some pretty good trading ranges and hopefully give you guys a really, really solid idea of what to expect this coming week. And again, we've been talking about this. It's all about rates, maybe not about it. On the headlines, we're hearing a lot of, rates are hitting, and I have this down here as the 10-year note rate hitting the highest since 2017. If you're thinking about looking at bonds and stuff, bonds again move inverse from the rate. So TLT, as an example, is 20+ year bond. That bond is it's like a piece of paper. I don't have, if I had a piece of paper, that's your bond. Let me see. Okay. So here's my bond, right? It's a piece of paper. And on that bond, let's say it's 5%, right? I don't know if you can see that. Who knows? 5%. That's the yield of this piece of paper. I have the yield and I have my bond that are two separate things. This piece of paper itself has value. That's what you're looking at when you're looking at TLT or something like that, right? You have to hold this. You have to own this to collect your 5% or whatever it is. But again, owning this piece of paper has a cost. And let's say if you looked at it a few weeks ago, it's probably like $100 a share for TLT that would yield you your X percent per year or whatever. But now the value of this piece of paper is going down. So it's like $90, I think, right now, something ridiculous, pretty low. Let me see. Yeah, sub 90, which is actually the lowest that I've seen all year. I don't remember seeing TLT below 90 in a very long time. So it's getting really interesting. So we want to watch that. I think that's going to be one of the biggest things to watch moving forward. Let's say TLT specifically in combination with the dollar, and we'll look at DXY for the dollar. When we're looking at what's going on, if you're trying to figure out in the market, what the hell, right? We're closer to the end. Why are we selling off? Number one, let's just say things typically end in spectacular fashion, right? So we have this saying in trading, right? Blow off tops, right? Well, you can see that to the downside also. So when you're looking at where's the big rug pull, that's probably time to buy rather than the next one, whatever it is. If we have another one, I'm assuming that we actually will, and I'll show you why. So this is, I would just go to the Google FOMC Fed or CBOE, sorry, Fed Watch tool. I just took a screenshot. You know what? Let me just do this. I'll do it live with you. CBOE Fed Watch, right? And just go click right here. And if you're, this is in terms of what is the market pricing in terms of rates. CY, appreciate you, man. Papier, yes, Papier is in the house. So CBOE Fed Watch, right? This tool tells you exactly, this is not a guess. It's not my opinion. This is fact. This is what the market is currently pricing in the probability of a future rate hike or cut or target moving forward. And so if you zoom on this, you have different dates: November, December, January, March, May, blah, blah, blah. So if you want to look at, let's say, so we have 2 more meetings left this year. Typically, I'd say to look at January if you want to get a hold of where is the market pricing and the terminal rate to be for this year. And where, get off this. So we're currently at 5.25, 5.5%, right? We have 80% probability of being at that same rate come next month. And then here we click on December, 60% probability of being at that rate come December, and a 34% probability of another 25% rate hike, right? To 25 basis points more to 5.5 to 5.75. Check this out. Click this little compare button, and I'm just doing this for you. And then you'll see what the estimates were in the past. And I don't mean a lot of past, right? We're talking September 22nd, September 18th, August 25th. Today is September 25th. So this is 1 month ago, August 25th. The probability of a rate hike for December was 45%. We didn't have this FOMC meeting, and now it's 35%. So help me understand, where is the market really, like, are they buying this? What are they saying? The market's saying, F you, Powell, I don't believe you. That's legitimately what you're seeing, right? And every day that we've moved forward, the market's not buying it. And so this, to me, honestly, this is the one thing that's giving me serious pause, right? It's not going to be until if I see this, let's say December or January, this is just one, and I'm going to go to one other part. If I go to January and say, okay, well, here a month ago, January, 39.86% probability of a rate hike by something by the end of the year, right? And let's say I see all of a sudden, this for the January contract up over 40% at some point in the next 5 to 10 days. That's when I'm probably going to think, okay, it's a buy, right? That's when, like, is the market listening to Powell? Because right now the market is just not, it's not buying it. like barely buying it. And here's the worst part, right? So you'd have to actually go, sorry, I'm zooming around. I think it was June. So remember that 5.5 number? So here, June, 5.25 to 5.5. We have a 36% probability. The market is currently pricing in 36% chance that we're going to be at the same exact spot. Is near equivalent that there's going to be a rate decrease, a rate cut by June of next year. Like, come on, did you not hear anything they said? And I look at this, right? Look at the compare, right? So a month ago, it was slightly higher, right? A week ago, it was 35%. The market's just not buying what he said. So this is the one thing that I'm like, if the market got back to, on par with what Powell's actually saying, okay, then I feel like, yeah, the bottom's really close. It's probably the one, right? But until I see that here, I just gotta say, it's not. It's tough. It's tough. Seasonally, we should be buying, like hammering, like pounding the table, buying. And I really want to. I really do. If you are new to investing and you're just now thinking about, like, when's a good time to really dip my toes in the water, probably sooner than later. Long term, like 5, 10 plus, yeah, go ahead, right? Just do a little of your typical dollar cost averaging. um, Everybody and their mother is talking about that. What is it, um, the 420 level? And sure, like, that's very possible. I'm just going to hop back into the slides. We also talked about debt, right? And so this is the same site. When we're talking $33 trillion, here's the current debt, right? And I mean, this is where it gets really tough. And this is where, if the debt's too high, and when I say debt, so for the US, when we talk about government debt, that's honestly, that's a totality of, like, individuals, corporations, state, local governments, just total debt, right? That the US owns, right? Tommy's asking, let's see, when the Fed starts cutting rates, does this mean we are going to see a bull run for the year? That's a good question. That's a really good question. The tough part about that is, typically the first rate cut is a sell signal. Like, I'll just say that. So if you go back and you look at the stuff, look at your charts, the first rate cut is typically a sell signal. That means that what that will look like is that we get this euphoric type of run up or bounce, right? Like, which I think we're going to have soon, right? We get this run up into the anticipation of the cut, but the actual rate cut is a sell the news event, if that makes sense. So the market, let's say, for anybody, by the way, that's been trading less than a handful of years, you might be trying to tackle the idea of, like, okay, markets don't V bottom, right? Like, if you came out of the Trump pump and if you were learning to trade 2 years ago, I mean, let's just say this, that was a once in a lifetime situation. It's never going to happen again. Don't expect it, right? The market, usually they rest or they run. That's what I say, right? Markets are usually either resting or running. They're trending or they're chopping, trending in whatever direction. But after a big move, expect a rest period, right? Markets don't, it's not typical for them to just, like, bounce and totally recover a move. It's just not normal. So expect some chop. Is that chop tradable? For sure it is, right? But what you should not be doing is, you should not be buying January contracts right now, thinking that, oh, okay, well, we're going to get a pop, and it's going to continue on through the rest of the year. It's not, um, I would not recommend doing stuff like that. That honestly, that and selling puts when stocks are high, those are the two things that will absolutely destroy your accounts. So just be very, very cautious. Aside from that, there's one thing, if you already know me, size matters, right? So your sizing absolutely matters. Um, it matters more than anything else. Your direction is pointless if your size is off, right? So anyways, and you'll feel really lucky if you do get the direction right. And your size oversized, you'll be like, oh, like I went to Vegas and I hit a jackpot, and you'll just kind of like get stuck chasing that FOMO, or that last feeling. It's a really tough spot to get out of. So just be, um, pigs get fat, hogs get slaughtered. Don't be shooting for the moon. I think taking it's tough as a swing trader. I'll just say it's tough right now to get more than 3 days trending in a row. Very tough. If I do get a 3-day trend, then then I'm feeling really lucky. But right now, this market is more of like, look, if we do get a bounce, I'd be taking it off like the next day, like 90% right now, to be fair, right? So this week specifically, and again, this week specifically, because we had an outsized move last week, trending week, right? Expect some chop, maybe a little bit of rebound between today and tomorrow, and then pull back Wednesday. And then Thursday, Friday, let's just say Thursday, Friday, I'm expecting a two trending days. But I don't know what direction that trend's going to look like, right? I just went over what's concerning me. Obviously, so high debt like this is actually, believe it or not, bad news, but could be good news for the market. If this stuff is putting a lot of pressure on businesses and individuals, that's more of a cause to reduce rates, if you will, if it's damaging the economy. But it's got to be big time, right? Um, but not until the market's like listening right now. And it's like there's a bunch of kids out there that are just like willing, Willy Wonka, whatever, like just doing literally whatever they want, right? Summary, yes. Good job, Tony. Be cautious. Cautiously optimistic, optimistically cautious, whatever you want. It's all good. But be cautious. Just going to hit a couple things. We don't have earnings season right now. Earnings season is very slow. There is a couple things. So Costco has earnings this week. So that's tomorrow after the close. And then another one that's notable would be Thursday after close. Nike's been like a horrible investment if you own it. I'm sorry. I've been nothing but taking short shots on this thing. But today, sub 90, I was like, well, okay, that feels a little bit overdone to the downside. I don't know how much downside there would be potentially left in here, but the price action is telling me that there's something broken, maybe fundamentally, with the stock. That may be wrong, so we'll see. But it's not going to be till Thursday after the close that all of that stock actually comes out into the open. So if you're looking for an entry point on something like a Nike, I'd probably wait for a few days after they do report. Another notable, Micron might have a little like pre-earnings pop, stuff like that. But this stuff, I'd be really, really hard pressed on these. And at Costco, I like Costco, but I don't know if it's just me. Every time I've gone into Costco lately, God, I hope nobody from Costco's. It might just be my Costco's. I don't know. But the cashiers are kind of like bad mouthing Costco lately. And I'm like, I thought this was a great place to work. But that's a little, I don't know, just a little funny note. Makes me kind of want to short it. Sorry. So really quick on the news front this week, we really don't have a whole lot. Monday, Tuesday, Wednesday, right? So Monday, Fed Manufacturing Index, National Activity Index, really nothing going on. Tuesday, we have some housing numbers. What I'd say about the housing numbers is that they have not been moving markets. So, and let's just do this. If you're looking at this, right, and we go into these, what does that look like? So this is this week, Monday, Tuesday. So housing price index, new home sales here. When you look at, and this is just whatever calendar, it doesn't matter. Trading economics is what I use. When you look at these data points, there's only one thing that matters, right? And it's not It's not what it comes in at, right? So here's today, Dallas Fed Manufacturing Index. It's not what it comes in at. It's going to be what the consensus or the forecast number was. So yeah, down 8. I'm not familiar with this metric that much, but it's gonna. This is a big delta, whatever that was, from the forecast, right? New home sales month over month. Here's your forecast: down 1.7% is what the market's expecting or currently pricing in. That's what I mean. So the market is currently pricing in this. If it's a big delta from that, if it's a big difference from the forecast or consensus, that's when you'll get something that moves the market. It's going to have to be pretty massive in difference right now from a new home sales perspective. Wednesday, durable goods orders expecting to be down. That's actually good. That's that's less inflationary. That's pretty good. Expected to be slightly less good. That's fine. And we get oil status report. But funny enough, right? So Wednesday, we usually get the oil status report. We've been dipping into the Cushing, Oklahoma reserves still. So, there's your gas prices. It, they could go higher, basically. And then Thursday, Friday, we get two big numbers. So remember this: fundamental events create your technical levels. What are fundamental events? So every first Friday of the month, we get something called an NFP, or non-farm payrolls, right? That's like how many jobs were taken this month for the for the U.S. economy. That's a fundamental event, right? GDP is the main fundamental event. So every couple weeks, we get like a preliminary GDP number. On this Thursday, we get the final GDP growth rate. And again, we were looking at right now, the forecast and consensus is 2.1%. That's, if we looked back a few months ago, this was a negative for the back half of this year. And this is where the market's been having to readjust itself. Prior was a 2% positive. If the final forecast comes in below consensus, I think this would be a bad news to good news. That would be cause for the market to actually bounce, maybe in a pretty substantial way. We'll see. If it's higher, and I mean by a considerable amount, yeah, we could see a bigger sell-off. So Thursday is the first day of the week we're going to get some real data that could be directional, and something to definitely watch out for. This, in my opinion, will be it'll probably be a first like stutter step Thursday, and then start trending after that. And that's why I say Thursday, Friday, I would expect trend days, and it's going to be based off this. It's not even between now and Thursday. Stick to the technicals, right? Like if you get a technical bounce, run with it, right? Technical sell-off, run with it. But Thursday, Friday, we have some fundamental events that will change your outlooks, right? So just be super cautious, right? Friday, we get the core PCE. So that is personal consumption expenditures. What are people actually spending? Expenditures, right? So this is that, again, it's that demand and that supply demand. So are we spending more? Or are we spending less? And we got that retail sales number last week, right? And it came out way higher, right? Way hotter, which was bad for inflation. But then when you dug into it, it's like, oh, well, most of that's coming from gas prices, which is not so bad, right? So now we're going to get this core PCE Friday, likely going to create a pretty heavy trend day. So if you're just hanging around, I would wait to really focus Thursday, Friday for your big trading days this week. And again, between now and then, expect some chop, maybe some tech. Just you rely on your technicals, and you should be fine. All right, so that's what I got. This guy, I don't even know what he's saying. Love it, you guys. Do you think? Okay, what is this? Daddy said, "Do you think we make new all time, dude?" So that's what. So if you want to make trading a living, right? And that's what I do. This is my living. What we don't do, and we violently try to avoid, is we try to avoid those kind of thoughts, right? So if I'm thinking, will something make a new all-time high or a new all-time low? I don't do that. What's true right now is that we have very clean ranges to trade to and against, right? And so as a professional trader, we're just going one level to the next, one level to the next. If it continues on, great, right? And if you stick with that mindset, guaranteed you will catch those like 10,000% trades or those like crazy off the wall gains, because you're going to be in the right place at the right time. But if you start taking shots for them before they're actually happening, you're going to lose more often than you're going to win. And net, you're probably going to be down, right? So just stay one step to the next. Try not to speculate too much or prognosticate, whatever. And you should be okay, right? That's what I'll say. So here's my first look, right? And if you guys are with me trading, some of you know, okay, I didn't take any calls yet. And my first trade was a short trade, and it was out of the gate this morning. So here's SPY, right? The reason I took a short is because I was looking at this. Okay, so fundamental creates my technical level, 428.74. That is my fundamental. That is my technical level that's coming from a fundamental event. Remember, we said the main fundamental events, non-farm payrolls. So that takes us all the way back to June. This is a non-farm payroll day, first Friday of the month for June. This is the low. This is the high. It's that simple, right? This is going to be a box, a trading range. This is going to be a technical level. We've basically reverted in the market all the way back to pricing the market where we priced it in June. Now we have to decide, is that accurate? It might be. So outside of that, yes, we do know there is a huge, and I think everybody's watching this, see this, these are volume shelves. And when I was talking about trading level to level, this is what I'm talking about. Here's the level, right? And if you put a volume profile on your charts, these little peaks, if this is a mountain range, you go peak to peak, peak to peak to peak to peak. That's it. And then as like in the valleys, that's when you get a pretty substantial, quick momentum type move. And if there's any, ICT people, smart money concept people, this little box right here, where there's little to no volume, that's what we call a fair value gap. And a fair value gap, by the way, this is screaming in my face right now. A fair value gap is where the market moves so fast through an area that it didn't have a chance to decipher what fair value was in that area. And more often than not, yes, the market tends to retrace and fill in, like chop through that, call it fair value gap, right? So if you go to my Twitter, there's this, WTF fair value gap, because it's pretty big. It's like screaming at us right now. So that's the level. So here's the thing, from a fundamental perspective, if we cannot hold 428.75 definitively, right? Like a day open and close below, we will see 422.50. That's what's going to happen, right? Whether or not it's the next day or the following couple days, that's what's going to happen, right? So 428.75, that's the key level for this week for the bulls to hold, right? And we did so far, just barely. so that's I just took, it's kind of, I'm not looking for new lows. I'm just going back to that level, and that's it, right? Where are we right now? Oh, sorry. Anyways, and we're taking this. What are the last pivot high low? This was that trade this morning from, this is Thursday's post-market session right here, and then Friday's post-market kind of pivot. And then I can move it forward. What happened right now? Here we are. So we broke to the upside. We're testing it. Do I have a major, when we talk about structure in markets, you're just, most recent, right? Higher high or lower high, right? This is a lower high here. This is a lower low here. If I'm looking for calls yet, I need to break this first. What I have to see is, I have to see us break this, and then I have to see us lock in a higher low, and then I can go, right? But I mean, I have to see this essentially turn into a higher high, break. For now, this is kind of like a wait and see, right? And then I have to see a lock in higher low like that. And then I have a possible consolidation bottom and then break up to the upside. And we do have this huge, look at this. So here's what I'm looking at. Let me move this out of the way. There's like, remember we talked about that fair value to the downside? It exists to the upside right now too. So yeah, I'm totally open to either direction, kind of consolidation. If we can break this high, then my thought is, okay, I'm going to enter on the next higher low, and my target is going to be 438.30, right? That's going to be a crucial level. So again, it's just another July NFP level. It happens to be exactly where we stopped at on a dime. Is it likely that we do retest that? It actually is. But what happens when we retest it? That's where I'm like, ooh, this is tough. So that would be my upside target. Legitimately, I would be thinking close her out fully. I'm not exactly thinking that. And this is what I'm talking about, level to level. That's a full close. Target acquired. The only way I go higher is a whole nother trade is if we break that again, and then I just go one more level, right? That would be, let's see, that would be 438.30. Has to break that. I'm out. Come back down, retest that same level, hold, I'm long again, right? But that leaves me open to the possibility of seeing, okay, fail, I'm short again, right? Just like that. Just like that. So that's going to be your upside target for now. And I'm using a 30-minute candlestick chart just because with a big wide view, like probably about a month's view, I think that could give you a better analytical view. This orange box, this is an average weeks range, right? And so what I was talking about yesterday is like we moved, or just a couple minutes ago, we moved an entire week's range in the course of a day. Look at this. Like this is from that breakdown level, 443. This is an average weeks. We almost doubled that. It's like 1.5 times an average weeks range. That's insane. So do I expect a huge move? No, right? And here's the other thing. If I took today's low here, this opening low, and I put an upside average weeks range, entire week range to the upside, where does that land me? It lands me exactly to that level I was just telling you about. So is that a good spot to close her out and then rest and see what happens next? You betcha, right? So that's the max upside target for the week. I do think that there's a very good possibility that we do retest it, but that is it. 438 done and done, right? That's the big breakdown level. That's this entire up like overhead supply. And I don't take that shot until I'm over at least today's high. For now, remember that downside target. So 428.74 average weeks range, right? If I took the top of where we like so far today, where does that land us? And funny how this stuff works, right? An average week range lands us right around that 422 level. So both of these targets, 438 or 422, very much like legitimate for this week. As it stands right now, totally neutral. Could go either way. Wait for your cue. Well, you guys are getting heavy. Is this a regular weekly session? Yeah, man. Same time, same place. I try to, right? CLF, I got some, looks like a couple questions on tickers. Cool. Spy goes, I mean, question. Yeah. Look this. Patrick, you rock, dude. Tesla. Yes. Debbie wants to see Tesla. Yes. I was actually pretty neutral on Tesla, but last week it had a big move. But that's what I want you guys to note for right now. I'm going to give you 2 order blocks for now, right? I already gave you the downside trigger below 428.70. If you want to be like, give it a little bit of a buffer. Basically, today's low. We are going down, period, end of report. And we're going down to where? I gave you the target, 422.50. That's what's going to happen. It's just what it is, right? If we break higher, like I want to see, yes, Friday's high break first, and then I'm going to enter on the next higher low, whatever that happens to be, then we will see 438.30. We're very close to it, right? Just what it's going to be. There are 2 huge value gaps on either side. Be completely objective this week. Do not take a directional stance. That's all I'll say. This could very easily go either way. And I'm telling you now, it's going to be probably pretty cheap to do it, to take these trades, because the catalyst is when? Thursday into Friday. So Thursday, Friday, that's going to be the big trading days of the week. Just how it is. If you want to sit out Monday, Tuesday, Wednesday, by all means, right? And then here's the other thing, right? This is that TLT, that bond. This is those yields. Look, the yields have to come down in order for us to think upside, right? Danny is asking about indicators. I'm actually volume. Oh, it's just the standard. It's just, I double click this, VRVP, volume, visible range, volume profile, totally stock, nothing special. This is at TLC. I need to see this bouncing. I need to see it bouncing. Like, it's not bouncing. So like, this is, if the rates keep going up, that is not good for the stock market. And it's specifically not good for those highly leveraged companies like who am I short today? Roku, right? Definitely not good for somebody that has a lot of debt on their balance sheets, right? The other thing to note, there's some talk about gold. I do like the idea of gold right now, but here's what I have to see. That this is the dollar DXY. This is the other thing that we want to watch, right? So if the value of the dollar, so as the value of the dollar goes lower, that's actually more attractive for like foreign investments to come in and jump into some US equities. That's actually bullish, right? But if the dollar's going higher, because why? Because this is where people are just pulling out of the stock market, parking their money where? In cash. This is what you see. This is a flight to cash, right? This is not, and by the way, the reason the bonds are going down, there's no bid, right? Like people are like, I don't know when the bottom's going to hit. So they're not even buying the bonds. And so the yields have to continue to go higher. It's kind of a messed up situation right now, not to be Debbie Downer, but it is what it is, right? Like I want to see the Dixie or US dollar index going down. I want to see TLT or the bonds going back up, i.e. the yields going back down. And I want to have my technical levels, like my technical reversal start, right? Right now, I have something that's saying, oh, we're potentially bottoming on SPY, but I don't have confluence. I don't have confirmation. I don't have confluence. Confluence meaning I want more than one thing telling me yes, right? If it's just one thing being here's my technicals telling me it's very possible, but at the same time, these other two fundamental things are screaming like yellow light, flashing warning signs. Not ready, right? Soon, maybe, but what do I need to see? I need to see TLT bounce. I need to see the dollar go down. Is that going to happen before Thursday, Friday? No, it's not because the data is too important. So that's what it is. All right. So you guys wanted to look at some other stuff. That's my 2 cents. That's where we are. Why do I not trade Mondays? Because volatility's through the roof. And right now I don't have a huge like technical signal, right? What am I doing? Oh, this is just where I was. I'm short Roku today. Somebody asked for Tesla, TSLA. So Tesla, I was on a space the other day with a buddy of mine, Casey, which by the way, we're going to start doing. And if you guys can join, I think this is probably one of the best ideas I've come across. We're going to call it the Trade Doctor. It's going to be every Friday after the market close. I'm super excited about this. It's going to be on Twitter Spaces. And what we're going to do every week after our week's end as professional traders, we usually take a few minutes to kind of go back and review what we did good, what we could have done better, what were some of our personal fumbles. We're going to do that in an open forum and give you guys the opportunity to bring some of your current trades up to us and say like what could I have done different. The whole purpose, totally just open forum, objective reviews of our trades, no egos, right? What I say, if you're bringing stuff up, we're not going to deal with anybody pumping their stocks or their discords or anything like that. This is real charity work. We're trying to do this legit for the better of the community. So follow at Paper Gains Inc. And I'll have a handful of other good traders, pro traders, like verified traders up and doing that with us. So, all right. Somebody asked Tesla. I'll do this real quick. Sorry for my ramble. So Tesla number one. So a little bit of a broken uptrend here. That's channel up. I'm going to start monthly, right? So right now, this was the prior month candle. That prior month closed at 266.93. For us to be an uptrend for September, we needed to have held that 266, whatever, 266 level. And then that candle for this month would have been green. Right now, that's not the case. Obviously, we're going down. I say obvious, maybe obvious to me, maybe not for others, but that's why, right? We needed that 266 level. That's going to be your key pivot. I use this as here's that level. It's right here, 266, right? The second that we couldn't hold that and we broke down, guess what happened? It was that level. And this is how it works. It's just so simple. We take that level, right? Here's that prior month's low. Our first trigger our target is going to be, and I'm going to take a fib left to right, 50% of that prior month range and or prior move, swing low to swing high, left to right, either way. Did we tag that? We actually did 6 something, which is this prior change of character. So right now, this is the range. It's kind of stuck so far, right? So now what? So we go a little bit smaller daily. Here's the thing. Tomorrow, if you're over 247, you guys will be like, why is this guy so simple? Like I'm not using an indicator. If it's over 247, what's happening for Tesla? It's going green. It's going where? Where's it going? It's going at least to here, 254, right? And then possibly here's your next target, and you're just going to go candle to candle. Am I going to say 3? No, this is what I'm talking about. You're only going to go one level next to the next, right? Here's what happens. You have this, remember this peak, these volume profiles. Here's a big old level. What is that, 255, give or take? You're going to run into overhead supply, right? Around 255 if you do get a bounce. If you do get a breakdown, which would be below 238, I think this is more likely that you get this bigger flush to 245, at which point, sure, I could really be looking at something to pick up. I think, from this perspective, if it was just here, right? Did we miss our entry? And I was on a space live and I was like watching Tesla at 215, 212. I'm like, I need to be buying this stupid stock. Right? And I think that was the entry right now, at least for the near term. Even if I took this, right, and this is just how we're doing it, right? From here to here, you got a 50% retrace. And I think this even hit down to a 6.5 at some point. As you play this forward, this is how these things work. Yeah, right there. You got a golden pocket retracement. That was at 150. I'm probably a little bit too far back for most people. So I think that's done, right? So we can take that off the board, and then we need to find our next swings, right? So that looks like a high. So then I'm going to go from here, call it to here. That would have been 210, 220, something like that, right off this in between these two spots, which I think we just got. So I would say right now, Tesla is technically it's been in an uptrend, and that's where we are. But the thing is, right now it's stalling out. So neutral Tesla, smaller ranges Tesla, from this low to this high, the actual kind of like golden pocket is going to be somewhere around that 200 level still, right? Could it still pull all the way back and hit that 200 level and still be in an uptrend? Actually, it could be, right? If you're looking at very specific order blocks, did we hit this 160? Yes, we did. I mean, sub 215. That's what I'll say. If I get a shot at 215 or lower, I'm gonna buy it, right? I can't. Yes, there's a new model coming out. I think the market knows that it's already priced in. I don't think there's additional upside. What about the charging network? There's upside in the charging network. Tesla sell signal on the chart going down. I mean, it's not a sell signal below unless it's below 238. It's not a sell signal because this would be that change of character, right? So here's that last high. Why this is not a sell signal longer term? Because that could just be it could just be a higher low, right? And that could easily just be, I think we do this, right? Like sideways, and eventually maybe break, right? But your real long isn't really until it comes back into here. And then if it does come down here, it's a short from here to where? To that 212. And then if it continues, okay, 212 back down here, it's gonna be like that. But that's what I mean, level to level, right? Right there. I wouldn't mind if my Tesla goes down that low because I missed the buying opportunity personally. That's just me. I'm not a big bear or bull, to be fair. I'm just kind of neutral, I would say if that's where we are. Nick, Elf. Oh my goodness. When you have an open short position, here's a question, right? When you have an open short position and you're not trading, how does that work? Just setting stops and take profits? I have an open short position right now. That works like, and I'm not even looking at the market. That works like me sizing to a point where it's not going to bother me one way or the other. To be fair, and I'm not trading. Yeah, it just means I'm super small sized. Data means something. What I'll say to this sell signal on Tesla is Tesla's not going up either until we're over like it's not going up until we're over this kind of like zone, right? So he's not going down yet, he's not going up yet. That's when it's neutral to me. Tesla wheels. One thing someone asked Meta. All right. Here's my deal with Meta. So Meta, there's one day. Here it is. It's this day. This is September 7th. Meta. If you guys trade Meta, you know exactly what I'm talking about. One day, Meta had some news, and it had what we call an outside day. Outside meaning that day it made a new low. So here was the prior day's low. It made a new low. It broke structure to the downside, but it also at the same time made a new high in the same day and broke structure to the upside. Whenever we have a situation like that, you stop and you pause and you put the stock on the shelf. And I'm pretty positive I was in this trade and I literally said, this stock is going in the drawer until it breaks this range. And so that day's range is 307 to the upside, 292 to the downside, 292.25, give or take. And what has it done since? Look at this. It tried. Nope. So what does this give us? This actually gives us a very clean tradable range, right? Can you flip Tesla back and forth between 307 to 292, and have your, I would say, and have your exit points at the midpoint, which is about 300, because at the end of the day, that's where it's likely going to be consolidating for quite a while when you have this kind of price action. Let's just see, right? Every time it tries, it just hasn't happened, right? So I need, if this is going to play out like those fundamental events, I need a day, and there's where we are today. Guess where? 300. I need a day where where Meta opens above or below that one of those two levels and closes above or below one of those two levels clean, right? This day, it's not over. It closes above. It's not super clean, right? Immediately rejected. This day didn't open above. I need a full candle, like fully above, right? Or fully below, opened and closed, to start really thinking about trading this. Otherwise, I think you can trade this range back and forth, right? Like all day. Seriously. Like all day. If you like to sell premium, it's a beautiful range to sell. Yeah. So Nvidia is a big short watch for me. So if you guys remember, here's this prior downtrend, and I'll tell you why. And we just want to mark, right? So we want higher lows, or we want higher highs, or we want a clear lower high. Unfortunately, I do remember being on some things with some people that are like in a lower low, like heavy, sounded maybe a little bit heavy into Nvidia. So since their earnings report, so here's the earnings. This is your fundamental event for a stock. It's this, right? Since this earnings report, Tesla's proceeded to make new relative lows from that day's close, right? So this was potentially a higher low. This was definitively a higher high. But what we got here was a lower high. And this, from this here, this is a lower low, right? So we're going to call this, sorry, this might be going over. We're going to call this a break of structure, right? This was a break of structure before here. BOS for break of structure. How am I on time? I'm okay. And since then, we've got nothing but lower highs and lower lows. And this downtrend, I was like, I had this and I saw this pop. And whenever we have a downtrend like this, right now we're just kind of hugging it. I could make this a channel. When we break out of something like this, here's a channel. It's likely going to be a fade for the first one, if you take that out. So there's your channel, right? The first break of these are typically fades, right? That's just a 1/2 standard deviation channel. We're in the upper half of that channel right now. It's probably a little bit cleaner right here. And what happens when we're in the upper half? We usually just fade back to the bottom half. So those trend lines aside, where are we today? And I go back to that break of structure, things like that. So lower high here, lower low, lower high. Here's a pretty key order block. If I zoom out, this right here is going to be another, I don't remember what it was, like a fundamental event. But what I'm saying is, like, when I do my charting, I'm looking for these kind of like candles that are sticking out like a sore thumb. Something in a major consolidation, right? Like this is a major consolidation, just what it is, right? Like, I don't think that you can really say it's not major consolidation, whatever. And then you have a break for whatever reason. Maybe it's news, maybe it's something else, but I'm going to take that order block and I'm going to zoom in maybe a little bit tighter and say, what's going on here? Right here, we're going to call this a price of interest, LOI, level of interest, whatever. And that's where the bulls really stepped in. So what I'm looking at here is that's 426.76. Anybody that really bought in here, because that was a lot, right? And they rode this quite a bit, right? They got some nice wins. They had a chance to exit here. And what did they do? They slowly sold off, and then they bought again, maybe right here. 405. Right there. 405.39. Right there. You see it? So these people right now are pretty trapped, and it's in a pretty clean structural downside, short term downside. And so what are we running into today? Look at that. All of this. Anybody that bought right here, they're about to say, see you later, exit stage left, a penny lower, right? So 420, and we're going to go use this volume shelf. So peak to peak, right? I'm just going to zoom out so we see this. There's a lot of stuff here. This is an entire, let's call this, let's see. Let me just move this. Value area, right? So this giant peak is now your overhead supply. See how this is forming? And we go peak to peak. So right now, this is just the next spot, 406. I mean, if you're long NVIDIA and you're looking at something sub 386, that's really tough because you do have this huge, not that it's going to fill. I don't know. I'm not. So this is what I don't do. I'm not thinking that far ahead. I'm just going level to level. And so right now, if we can't get over this shelf, it's got to go, at least it's got to go lower to find more buyers. Does that make sense? It's got to go a little bit lower to find more buyers. Here's the bottom of that channel, right? We could see something like that. So that's all I'm looking at. And that's going to hit us somewhere right around this prior consolidation here. Let's call it this consolidation for That's 387.25. See it? I'm sure you see it. Assuming it's for trading, not long term. Yeah, exactly. If you're talking about long-term investing, just think about it this way. If you like Nvidia at 420, you should love it at 300, right? And if you don't love it at 300 from an investing perspective, what are you doing in it at 420? Regardless of whether or not, Michael, regardless of whether or not it's overbought or oversold. I'll tell you what, Nvidia is a stock that will remain overbought, overvalued, oversold for as long as it wants to, right? So, yeah, those aside, from an investing perspective, here's the thing. If you like Nvidia at 485, you better like it at 385. And if you don't, what the hell are you doing? That's I think where we are. I can't do PAGs. I'm not familiar with that one. I think we did Meta. We did one Elf. Elf was like, whoa, was running. This was one where like, oh, okay, this is a pandemic. I want to call it a pandemic stock or not. This is like the Ulta. Killing me, man. Killing me, Smalls. I don't know. I can't really give a huge. This is more like a fundamental story. Technically great. Yeah, technically a lot of fair value gaps. If you see it over 113, it's going higher. I would stay away in this range. Here's your shelf. Elf. This is going to be like my cart, like I'm short cart. Well, never mind. It's not like cart. Cart's just like a gross. I saw arm popping this morning a little bit. First structural break. To be fair, I'm just waiting for it to get high enough and short around 55. Just me. Let's see. I think that's good for right now, you guys. Do we have anything else? Thoughts on cart? Shorting cart? You know, is it related to Costco earnings this week? No, it's not. It's just the fact of like the valuations for these things. Look, if you're looking to invest in something like this, legitimately, you probably want to wait like 6 months to really get a good idea of market's just in price discovery mode. This was priced towards the high end. This is the IPO price right now. I think, yeah, some of the market makers might defend this $30 level. Sorry. But it's having a really hard time. They might defend it to not look so bad, but was CART nearly as big of an IPO as ARM? No, it really wasn't. Right now, they're just barely defending this 51 level on ARM, which, by the way, ARM is more of like cell phone semi play than anything else. So it's not like AI. Just saying. I still don't really have like, is it really breaking highs? Like here was the last high. Yeah. Okay. Equal low. I think I was short Friday. And then I covered my short Friday. I was like, look, it's not a new low. So it's kind of like that. It's like, did it continue trend down? No, it didn't. Right. So I couldn't continue to be short. Do I want to be long? No. It made a big move. Let it rest. Trending or chopping, resting or running. Obviously this is running. Now it's time for a rest. And that means consolidation. Doesn't mean reverse. It's just more like investors and like appetite for risk, right? Cart here. I don't think that anybody's going to come out of the woodworks and buy this stuff. So it's kind of capped at the IPO price. The only other thing is that they're kind of, anybody who bought it's like got a lock up. So it's more like, are there going to be actively people shorting this right now? Just me. It's my $25 Affirm put. Yeah. Oh, and Netflix was getting interesting. So Netflix, I own WBD also, haven't added. But Netflix, so this is, again, I think this is constructive, seeing this like resting period. So Netflix has been running, right? So obviously, I say obvious, right? Here's running. Now we rest sideways. And then where does it go? I don't know, right? Does it go either way? We got to be open to either way, right? And again, from an investing perspective, if you liked it at 400, do you like it at 350? You should, if you did. Otherwise, what's going on? You do have technically, you have a couple. So 367 is the 200-day moving average. That's going to be, so from a technical like moving average perspective, there's really only a couple to use. They should all be locked on the daily perspective. And that is 200-day, 20-day, and 50-day. You can play with others, but just three main ones. That's not it. It might be this. No. Of course, the last one. So red, blue, and gray is what I have on mine. Red is the 200-day, blue is the 50-day. There's a little gray one that's blue is the 50-day, and then there's a little gray one on my chart that's a 20-day. And again, these are all daily moving averages. Right now, like, and the way you want to like let these play out, this is telling me that it's going to rest also. Where's my pen brush? So here's the moving averages, right? They're going up like this, right? That's the blue. And then the red is here. I want to see, like, we're going to see blue kind of like base out, and then we're going to see red base out like this. And you're going to get this where they're both kind of flat. So Netflix is going to, this is telling me that as the 200 days or the 50 days coming down with the 20 and the 200 days still in a slight uptrend, both of these are going to flatten out like this until they get super tight. And then you're going to get a little spike, and then third or fourth move, you're going to get a big one of these two, either down or up. But that's not going to be probably till like the back half of the year. Let those moving averages come in really tight together. So once those main moving averages are really tight and they're ready to squeeze, cool. Then something. You might find these type of situations also. So Boeing, interesting enough, I nibbled at the stock. I bought the stock. I swear to God, I bought the stock this morning. Why? This is extension downside, right? Do I think it's going to reverse? No, not necessarily. But do I think that this is a really good area to defend? Yeah, I really do. I really, really do. So can it go lower? Yeah, it really can, right? But equity here, this is probably where I'm going to be thinking selling puts here. This is probably a good idea to do something like that. Put spreads rather, not just naked puts, maybe around this 190 level, right? So if you get this gap fill, 190 for sure, right? And right around here, I think it's good. We've had like, I don't know how many days this is that Boeing's been bloody red every single day. This is the first sign of life at the exact spot that it should have it. So do I think that we can possibly see a nice little bounce left to right? Right? Where does that bounce take me? Right around that 200-day moving average. I want to take this off. That was a prior level. Right around that 200-day moving average. Here's a 50% retracement. I'm looking peak to peak, level to level. Here, what am I not saying? I'm not saying 250. I'm not. Resting or running. This is a run. Maybe we could chop to the upside. This is why I'm saying probably selling puts first and then waiting for an extension or initial reversal signal, which won't come until we're over 204. This 204 right here. That's when you're going to have an edge on upside calls. Otherwise, kind of like give it a second, mean reversion. IV is going to be dying off. So 350 to 210, 212. That should actually be a pretty quick move. But between now and then, it could be choppy here, but that should be quick. And then you should see some kind of rest. And that's the 200-day right there. So a blip, a little bit of a mean reversion. Is this extended to the downside? Yeah, it is. Why am I not thinking reversal? Remember those moving averages. Here's my 20-day coming in like this. Here's my 200-day coming in like this. Here's my 50-day coming in like this. So when's the real trade really come? Way later, when they're all super consolidated like this. What does that look like? It looks like this when they're really tight, kind of like chopping. You can see this a lot on Tesla. I don't know if you can see this, but when they're all literally sitting on the same spot and then they expand, so moving averages tight together and they expand, that expansion, downside move. See, when I say expand, see how the space between these two moving averages is getting wider and wider? That's expanding. All right. Really bad artiste. All right. Look at that. You guys got a little class time. See how this is doing the same thing where we are? It's doing the same. Chopping, consolidating, neutral. Same thing upside. Super tight moving averages all together. And it's not until you get the expansion that you get a big move here. So did you need a bottom ticket? Nah, right? Who cares? Not me. You bottom ticket 3, 4, 5 times, whatever. The move actually came way later over here. So be patient. All right, guys. That's all I got for now. The next flusheroo. We're very, very close. What is Patrick asking? So expansion leads to conviction in the short. In whatever direction that they're expanding. This is a long, right? They were all tight together. Here. I'll just change this so you could probably see it a little bit better. 100-day, or that's 20-day. 50-day. Hopefully you guys can see this a little bit better. Yeah, you can see that just fine. But like the distance between them is really small, right? Small. It's when you start to see, okay, the distance between them is starting to expand. Expansion. Now it's expanding. Breaking structure. Boom. You see it? And then this continues to expand. When they start contracting, no good. When you get, these are your crosses. But as they got tighter and tighter through here, now I know, okay, well, here's the new distance. It's getting smaller. So the moves will be smaller and smaller until you get super tight. And then quick one, smaller, right? Like that's just how it works, right? Just tells you where momentum's coming from and going to. All of this, basically, right? If the distance between moving averages is getting smaller, it's not time to buy calls or puts. It's not until that's starting to, and look at that, that's crazy tight. I don't think it gets any tighter than that. But yeah, we caught this for sure. Why? Because I have a downward trending moving average on the 200. That's my overall trend. These might have been going up, but that's the main one. And then boom, big move. Doesn't happen a lot, right? More consolidated. But now this distance, that's what I'm saying. So like the distance between your moving averages is getting smaller. See it? So is it tradable? Yeah, it's still tradable. But it's not like the, crazy trade. All right, guys. Look at that. You got a little school of gains, little weekly trade plan. You're good to go. I appreciate you guys. You all rock, and I will see you on the next one.